Here we go. Sorry, guys. This is my first time in about 7 years that I've ever missed the start of a webinar, and I do apologize. There's a long, complicated story behind it, but I'm not going to bore you with that. So the first thing I'd like to do is just quickly check with you that the sound is okay. So if you can just quickly confirm that for me, please, and I do apologize. So it's been okay. There we go. Thank you very much. So yeah, it's unusual. I've never ever missed the start of a webinar, but actually today I did. I apologize. So right, let's have a look at what's going on in the markets, and I do apologize for that. Okay, so first of all, there's a risk disclaimer. While you're going through that, I need to tell you a little bit about myself. I am based in the City of London. I am a trend trader, so I'm a day trader. As I said, I'm a trend trader, which means that I tend to trade with the trend. So my 4 hours, 4 hour charts, I'm usually looking for a bit of direction on that. And then I'm usually looking for an entry on, say, the 15-minute time frame. So prior to that, I used to actually trade daily. So I was trading the higher time frames. Because we've not really had any strong trends in the last couple of years, I've actually been moving more to day trading. It's been very interesting. And so I'll take you through a couple of the markets we've been having a look at. If you have any questions, please don't be shy. Please feel free to ask any questions as we go through this. So first of all, on the agenda today, we're going to be having a look at a live chart analysis of all the major currency pairs, identifying strong opportunities within the markets, and building a watch list for the current climate. And I think that's a really, really important point, is that one of the things that we really have to do when we get into trading, first of all, is when we talk about trading versus investing, is that we have to distinguish the difference. We have to distinguish the difference between trading versus investing. Okay, so when we, and I'm just going to quickly pick a color here for my pen. So we'll pick something here, light blue, there we go. Okay, so if we're looking, for example, let's just say that we're looking at this at a daily chart of Tesla, for example. And we can see the market goes up and then it goes down. Then we can see it goes up again and it goes down, and then we can see that it sort of goes up again. Okay, so if you're an investor, let's talk about this quickly. If you're an investor, what happens usually, and this is a generalization, so obviously this doesn't apply to everybody, but I think I think most people who could relate to what I'm talking about now. So and this is important, by the way, because if we're going to go and have a look at the markets now, it's very important that we distinguish the difference between the two, because they are different activities, and so and the outcome depends on on what it is that we're looking on, how we approach the markets. So if we're an investor, usually we have some passive, we have some income, we have some money. We want to put it in a high interest. Well, we would prefer to put it somewhere where it can earn, where it can grow at a faster rate than it would in a high interest bearing account at a bank. And so usually we just want to put it into the markets. We're not going to wait 3 months for our entry signal. So we want to put it into the markets wherever that is at this point in time. We put it into the markets, and we have to then write out the good and the bad and the good and the bad. But the idea is that over a long enough period of time, the money put into the stock market, for example, could go into properties, but it's could go into the stock market as well, will increase in value over time. Okay, so first of all, what makes us different is that we usually don't have an organized time frame, so we're not really worried about where we put it into the market. Our logic is that it's, the sooner it gets into the market, the sooner it can start working for us. We write out the good and the bad, and the real goal is that over a long enough period of time, we expect the market to go up in value, and so we're going to get an increase in value in our investment. And so this is very important, because most people don't get this, but what this really does is this tells us that we are looking for, whichever market we engage in, we're looking for the market to go up. And that's a very important point. Okay, we're looking for the market to go up, and it's going to therefore increase in value. And so usually what that will do is remove currencies from the list of, oh, that's terrible, but remove Forex or FX from the list of markets that we're going to be having a look at. The reason for that is that when we look at the currency markets, we look at, say, euro versus US dollar, we have, we're actually looking at two different economies. We're looking at the US economy versus the euro economy. And we're looking at, and that's quite important because that distinguishes the difference. We're saying, for example, that we're looking, for example, if we look at, say, a stock, we look at gold or we look at Apple, we're looking at supply and demand of a particular instrument. But if we're looking at a currency, then we're looking at the supply and demand of the euro versus the supply and the demand of the US dollar. Okay, so it's a big difference. So currencies are usually not the kind of thing that we would look at as an investment if we go through so now what I'm going to do is let's talk about the difference between trading. And so now we'll go through the trading aspect of it, okay? So trading versus investing. So the difference is that with trading, and this is really important, is that we are looking to earn a primary or secondary source of income from the financial markets every month. Okay, so that means that that it's quite important. We're actually looking to bank some money every single month. And so when we're doing this as a trader versus an investor, we are looking to, the game is different, the rules are different, and the risk is a little bit different. So as a trader, what we're looking to do is, ideally, we're looking to bank some money every single month. Every single month. Okay, so it's not an open-ended, oh, I'll just close it out when I can kind of scenario. We are actually looking to make sure that we're actually looking to make sure that we can ideally close these positions within a few days to a few weeks. And that's really, really, really important. So we'll look at the current conditions, go, okay, it's trending up. So it doesn't matter what the market is, whether it's oil or whether it's a commodity such as gold or oil, or whether it's a currency or whether it's an equity. We're looking to, if it's currently trending up, we're looking for buy positions, and if it's trending down, we're looking for sell positions. And this is really important that most people understand this, because they're continually trying to merge what they think trading is with what their fundamental, longer term, bigger picture opinion of a particular market is. So where do they think Tesla is going to be in 5 years' time? And that's not relevant to traders. Okay, so case in point, let's go and have a look at Tesla. Let's go see what that looks like on the chart. All right, so what is okay, so I just had to wait for that to refresh. So what is the trend for Tesla at the moment? Well, it is trending higher. It is in a bit of an uptrend on the daily. It has got some resistance up here at the moment because we don't have a higher high. We did not get, so what we were expecting is we've got a trend, but what we were expecting was that we didn't. We have a bit of resistance there, so price is here, but we've also got a high low. Okay, so the trend is upwards. And if you look at these indicators at the bottom, they are trending upwards. So the easiest way to use these, and it's the most reliable way to use these two indicators at the bottom, is essentially if they are doing what price is doing. Okay, so if price is trending higher, I want my indicators to be trending higher. Both of them. So their job is to do the same thing, to give me the sort of effectively confirmation of what I'm looking for. Okay, so here I expect them to be trending higher, price is trending higher, I expect the indicators to be trending higher, and therefore that then tells me that the trend is relatively strong. So if I go and let's just bring this back, let's go look at this from a weekly perspective. You can see here, if we look at it, we are trending a little bit higher. And by the way, it really, if you're struggling, if you're new to trading and you're kind of like, well, for example, at the moment, there's a lot of talk about, are the markets going to be tanking? Okay, are the markets going to be tanking? So what is it that we need to be seeing for that to be the case. We'll go to currencies. We'll talk about currencies in a moment. But if we're going to have a look at some of the indices here, so let's say, for example, we look at the Dow. So we look at the Dow. Okay, so there's a couple of crucial things that are very important to highlight here. Okay, so first of all, when a downtrend shifts into an uptrend, there's a couple of things that have to happen. First of all, we have to break a previous high. Okay, so we have to break that previous high, which we've done here. This is a good thing. So we've broken that. So this was a downtrend at that point. It's now sort of turned around, starting to climb a little bit higher, coming down temporarily, but within a potential uptrend. Okay, so for example, like two people that I obviously admire very much would be Michael Burry, who's in the Big Short, as well as Ray Dalio, who is Bridgewater Associates, and their concern effectively is that due to the central banks printing money, that's going to catch up with us. So if you keep printing money, effectively you're going to generate debt, and that the correction we've seen in the markets now is just the first part of it. Okay, so it's an overdue correction. That's kind of where their thinking is. But it also, the other reason why I think that there's a strong possibility that the markets could continue to climb is that we've got a lot of, out of the US and also out of the UK as well, as we've got a lot of very positive data. We've got, low unemployment. We've got, there's a lot of other stuff that's not the same as it was during 2007 versus 2009. So if you go and have a look at this, for example, on a monthly period, this was this period here, which was the fourth year or every 4 years in the US is always an election year in the US. So this was actually a period where Obama was in his 8th year, but it was his fourth year, if that makes any sense. And this was therefore an election year. And then we had Trump came in here as president. We could see the market went up. We had quite a bit of volatility. This is COVID. We can see the market has continued to climb. So we've got actually from around about, obviously from November through to January, so call it January 2020, we have got Biden coming in. So we've got this growth here during Biden, and we've got a bit of a correction now, and this is normal. So it doesn't matter who's president. It's always going to happen. You're always going to have an extension and a retracement, extension, retracement, extension, retracement, extension, retracement. So that's normal. It's always going to happen. They always want to blame it on who the existing president is, but it's going to happen anyway. So you can't avoid it. In fact, actually, the interesting thing about the US markets is that they have continued to climb with very few corrections. So this is pretty standard here. And this is kind of currently what's going on at the moment. The price has come back towards the 50-period moving average over here, over here, over here. It has produced a bullish monthly candle for July, and it looks as though it now is interested in attempting to return to the old highs. So the reason I'm talking about this is relevant to the US dollar. This is relevant to inflation. And so I want to see what's going to happen with the markets there, but I wanted to give you some sort of sense of what's going on with the markets here. If we go and have a look at it on a weekly perspective, there's a couple of things I'm looking for here. So first of all, we've got the 50-period moving average. If the market is above the 50-period moving average, that's what we could call a bull market. So we're not above it just yet. You can see we had a bit of a reaction against that last week. And so the question now is, are we going for the people who are very pessimistic, they think that this was the first leg down and we're going to have a second leg down, which will put us, sort of in this type of area. And hi, Eddie. Sorry, I'm just looking at the questions now. So very nice to see some of your, I recognize some of the names, and I like it if you guys are attending on a regular basis. So the first, obviously, because what you're trying to do is to build up your technical analysis skills, right? So that's what my job during these webinars is to at least present how I break down the markets. And I was taught how to do that by Nick McDonald, who started Trade with Precision. So, so that you understand that I learned from him, and therefore I'm teaching you guys. Okay, so we're looking for, there's a lot of very negative talk right now saying that we're you know, the sky is falling and we're going to see the market head down. One of the things I can tell you is that it never pays to be pessimistic when it comes to the stock market. Never does. Okay, because for historically it tends to go up way more than it tends to go down. And therefore, if you're going to short the stock markets, it doesn't pay off very well. It tends to be, what it does do really well is that if the market is looking really pessimistic, it tends to pay to be an investor. So if you can invest in markets when everything seems so doom and gloom, that's where you tend to do very well. Okay, so at the moment we can see the markets pull back. We've produced a bullish inside candle. We've broken above the high of that. The weekly is really what I want to talk to you about. So first of all, if we are above the 50 moving average, then I think it's fair to say we're in a bull market. But it's not just that. I need to see, so we've broken the previous high. This is really important. So we've broken this previous high, which is one of the boxes that we need to tick. We also need to see a higher low. So we need to see a high low and a high high. So that means that we need to see price come back and break that. And we need to be above the 50-period moving average. If we do all three of those things, guys, then it doesn't matter what you're hearing in the news. It doesn't matter whatever you're hearing or whatever you're listening to, we are in a bull market. Okay, so it's really important to talk about that today. If we are above the 50-period moving average and we are producing high lows, high highs on the weekly, so the most important chart right now is the weekly. If we are producing that, then, and we've got high lows, high highs, and we're above the 50-period moving average, we're on a bull market. And so where we are right now, to just quickly summarize this before we go into currencies, is that we have pulled back up to you can see how we were above the 50-period moving average and we're underneath it. You can see we couldn't quite get through it there. We can't quite get through it here. But at the same time, what we have done, we've broken this high. And if we come back down to, say, these levels, this area here, produce a bullish candle and come up, and if we break above that high, we are, without a doubt, back into a bull market. So the problem is that we're sitting at a point where the market could go down from here or could go up from here. I'm just telling you that if we do these following things, if we come up here, we break above the old highs again, so in other words, where we are now, we have to crack above there. If we produce a bullish candle here, and I think it would be in this area. I think it would be in this area here, and we break above that high. We produce a high low, break above this, and we're above the 50-period moving average. It is non-negotiable. We are in a bull market. Okay. So I'm just mentioning that because a lot of people are getting ready to short and sell everything in it, and as a general, it's not a very good idea. It's a much better idea to probably start buying and putting money into a bit of stocks. Okay, so let's go through and have a look at so I'm going to run over by about 10-20 minutes to make up for the fact that and I'm very embarrassed to make up for the fact that I started late, so we're going to do that. So the reason I'm telling you this is that I want you to kind of get a sense of what's happening with the markets, and there are times when, and it isn't always the case, there are times when you can have a strong stock market, you can have a strong US dollar, you can have gold can be doing well. This can happen. You can have all these things happen at the same time. But where we're at the moment is that everybody's concerned that the market is going to crash, and they're talking about a safe haven dollar, and then they're thinking gold. And if that's the case, we're going to see dollar kind of the gold. We're going to see that tank as well. So let's go through and have a look at gold. So we look at this. You can see, especially if you look at it from a monthly perspective, we are in a range. So gold is within a range. Could gold go to the downside? It could. I'm saying that it could. You know, in this period here, most people went around but I was probably 2 years into my trading. So 2009, 2011, I was probably into this. And I remember this was the first time ever where people were talking about here, in the same way that people talk about cryptos now. They were talking about, oh my God, you got to buy dollar, you got to buy gold, you got to buy silver, you've got to hoard it. There were PDFs everywhere. Everybody on YouTube, well, actually at that time YouTube wasn't even that strong, but everybody, you know, all these people were saying you have to do this in the same way that, you know, it's never going to come back down. You have to get into that. And ultimately it broke below this low, and it stayed below this level from 2013 all the way through till 2019. So the reason I'm telling you this again is to show you this is gold. We've been using gold as a currency for mankind's about 100 and something thousand years old, but we've been using gold for about 11,000 years, something like that. We've been using it as a currency for about 11,000 years. I'm just telling you that if you think that we can't it can't fall out of favor, it absolutely can. So here's a great example. It is range bound at the moment. We can see you've got wicks at the top, you've got wicks at the bottom. It is ping-ponging between this area. If you start to see candles closing near the lows, so you see candles here starting to close near the lows, we're probably going to see it break below that. And so what I'm trying to also do here is to show you that you need to trust what you see. So not what you think. If you're like, well, the world's going to crap, I need to be buying gold, for example, but you can see gold is going down. You need to understand that there's other reasons for it. Okay, gold can be part of the reason gold can go lower is because big institutions, hedge funds or whatever that have got gold in their portfolio, it doesn't really produce a lot of growth, and so they can cut it from their portfolio. They can sell their gold positions. They won't really lose a lot if they have to reduce what their exposure is, and gold is the easiest one to get rid of. So if you're wondering why gold might ever head down when you think it should be increasing in value, the simplest solution is usually that it just doesn't go anywhere. So we used to have really solid growth in all the history of gold. Before that, we always had this consistent kind of growth, and then ever since then it's been a bit up and down. Okay, so let's go through and have a look at the euro dollar. Let's start off with this. So the euro, to give you a sense of this, the US dollar is the biggest currency in the world. It is bigger than the next 8 economies combined. So if you take China out of the picture, the US dollar, the GDP coming out of the US. So in 1945, the US owned 95% of the world's wealth. Can you imagine that? It's just crazy. So they owned 95% of the world's wealth after World War II, and I don't know what that status is today. But we have to know that we have to appreciate what the dollar brings to the table. All right, it's not just another currency. It is like it's the biggest currency, followed by the euro. Okay, so if you take China out the mix, the US GDP is bigger than the next 8 countries combined. That's Japan, the UK, Europe. All of those combined, it's bigger than all of those. So we need to understand that when we see the market moving like we do now, especially if I bring this in and I look at cable, so I'm going to bring cable in, you can see it's heading down at the moment. So let's go through to a weekly downtrend. We look at euro, weekly downtrend. We look at Aussie dollar. Let's have a look at that. Also a bit more of a weekly downtrend. We've got Kiwi dollar heading down as well. Then we have a look at these going to the upside. So we've got dollar CAD is starting to push up. We've got dollar yen has obviously been on its own mission, insane, pushing up. And then we have dollar Swissy. Okay, so we've got areas here where it's largely been pushing to the upside. And so the point here is that in these cases, we can see it's the US dollar that's actually driving a lot of those moves. And that is not always the case. We've got periods over here where the dollar is doing its own thing, the euro is doing its own thing, but right now, what is driving the market at this point in time? It is predominantly the US dollar. And so our first goal is to trade in line with the existing trends. Okay, so there's no doubt in my mind, and this is something else I wanted to highlight to you, there's no doubt in my mind that this is a downtrend, but it isn't just that it's in a downtrend, it is the quality of the downtrend. Just look at your questions here, Charles. I didn't manage to plug in on time. Kindly send me a I will. Thanks, Charles. I will do that. So it isn't just kind of the direction in which it's going, it's the quality of the trend. Guys, I want you to please pay attention to this. If you look at this, you can see that there is quite a bit of structure to it. It's relatively steady and calm. And when you see a trend that looks that way, it tends to be a relatively strong trend. So first of all, it's not just the trend, but if the trend itself is nice and smooth, then that is a clue. That is an additional clue. So for example, here we have a look at dollar yen. We can see it's been broken through this level, broke out here in approximately September last year, and it has been going. Now, the only thing that I find interesting is that prices pull back. We then had a bullish candle. We had this bullish candle here, but the following candle didn't follow through. This one did. So in August, we have pushed through. We have pushed through, but we didn't in July. Interesting. And June, we had a bullish candle. So in other words, if a trend is very nice and healthy, it's not going to hesitate. It's going to keep going. But we had a bit of a wobble there. I do think we have to keep an eye on this level. I think there's a possibility that dollar yen could struggle when it gets back up to that level. And you can see where it is now. It's relatively bullish. So the point is that if there is a trend, then it's generally quite strong. And if we're going to have a look at it, for example, on some of the yen pairs, so let's look at Kiwi yen, you can see it's generally pushing up. There's some strong resistance in this area. There's another thing that I want you to do. I don't know how to, I'm writing a book at the moment, and I don't know how to put this in where it doesn't sound weird. You have to trust what the price action is telling you. You have to trust that it is trying to be honest with you and it is trying to communicate that stuff to you. But once you're in the trade, then you also at the same time mustn't necessarily trust that the market will get you where you're trying to go to, because the market doesn't know we exist. So when I talk about it here, for example, here you can see lots of exhaustion here, lots of exhaustion here, and an attempted breakout and a failed, and then it comes back in. So that one candle out, next candle back in. So what is that telling me? That it's telling me that yes, we have an uptrend, we have a general trend to the upside, but it's also telling me that at this area here, there isn't really anyone above like this area. There aren't any buyers above this area. So although the trend is nice and strong, this is really the problem. This is a strong consolidation area. If we go and have a look at, so the reason I'm doing this is I want us to have a look at all the yen pairs. So we go have a look here. Here is, for example, CAD yen. You can see same thing again. There's a rejection here, back up, a rejection again. So we've got a double bottom, and it's trying to push back up. So there's definitely a push on the yen crosses to the upside. There's definitely a push as it wants to head up, but there also at some point, just the same as we do with the stock market, sorry, is there doesn't appear to be anything above that. So we have a move down, bit of a push back up, and right now there's not a lot happening there. If we go look at Swissie yen, same thing again. You can see the Swissie yen is very smooth, methodical, comes back here, produces a bullish candle, pushing back up, but it just can't seem to get past that point. Let's go look at Aussie yen. Same thing again. So definitely when we look at the yen crosses, we are seeing there is a familiar trend. And when we are trading, so think about this, guys. If you're a day trader or a swing trader, so that means you're taking trades, sorry, on the 15 minutes, or you're taking trades on the daily, for example. One of the things that you want to do ideally is trade in line with the prevailing trend where the market is going. So areas like this get tricky because, you know, we could find that this just becomes, this is the end point for a lot of the yen crosses, and they end up coming back down here. So there's nothing worse and more annoying than you're trying to get into a trade, but you're right next to a major level. So if we go down to the 4 hour, we have a look, we've not got a lot of room to move. We know which way the market is trying to go. We know it's trying to push to the upside. But at the same time, we also know it hasn't managed to get past these areas here. So if we look at pound yen, go look at that as well. Go look at that from a daily, weekly perspective. You can see there's a lot of a battle. There's clearly a battle going on here. So when you're trading, what you're trying to do, ladies and gentlemen, is to produce a watch list of charts that have a very high probability of going one way over another. So if we look at the yen charts right now, we're thinking, okay, they should be heading to the upside. The only problem we're seeing now on some of these, let's have a look at euro yen as well, is that they're struggling to continue up. Okay, they really are struggling to continue up. And so actually, if anything, they look like they're due for a bit of a correction. So if we break below these lows, then it makes sense that the market's going to head down towards these levels here. And so it's really important. This is crucial. And I have to do this for myself as well. So it's not just for you guys, but it's crucial that you acknowledge what the chart is doing, not what you think it should be doing, but what it actually is doing. So in this case, for example, we've got an uptrend, we've broken through. So this is a break of resistance, a test of support, carries on up, comes down, still finds a lot of buyers here. So there's a nice strong bullish candle, but now it's not really going back up. So what that means is that the buyers that were here in this area, the buyers that were there this time, they're not there. We can't, there's no more buyers there. So it's that's exactly what the price action is kind of telling us. And also it seems to me that dollar yen seems to do its own thing. So if you go through, look at dollar yen is definitely pushing up. So where all the other yen crosses are starting to stall a little bit, dollar yen appears to be doing its own thing. Is that something that could happen? Yes, it is. Could Japan have a trade agreement with the US where, if you think about it, Japan is largely an export company, so technology, they export a lot. And who's their biggest trade partner? Probably the US. So therefore, dollar yen will have its own thing going on, but we can see what the yen in itself is doing quite a bit of. So, so we can see that that is generally the case. But as much as I would have said to you, look, we need to be trading dollar yen to the upside, I'm just showing you that a lot of these charts are struggling at these highs here. And the first clue that we're going to see a correction is when we start to break below these lows. So in other words, if we start to see that happen, we start to see dollar yen or other yen pairs, and in fact we should keep an eye on all of them. If we start to see them break these lows, then it's a very high probability that we are basically, when you see a trend change on one time frame, usually what that means is that the higher time frame is retracing. That's the best way to treat it. So that means that if we see the weekly changes trend goes into a downtrend, it means the monthly is retracing. Okay, back down, probably back down to into these old highs, and probably back down into the moving averages. Are we overextended? Absolutely. But we are also in very unusual times. We've got Russia invading Ukraine, and it sounds, this last week, it seems as though Russia is definitely losing the war. It sounds like it, but there's, it's a war. It's not a pleasant thing, and therefore there's a possibility that they might survive. But they're now recruiting soldiers from other countries. So, and there was a parade the other day in one of the Ukraine cities, and they used it was Ukrainians driving Russian tanks. So anyway, the point is that I think that there's a strong possibility that Russia is going to lose that war. But that has added to what we're seeing here. So we're seeing inflation, which, by the way, inflation is something that occurs at the end of every single bull market, ever. So 10 years from now, 15 years from now, when we have the next bear market, it's going to be inflation. Inflation is always something that's always there. People forget that. They're always like, well, inflation is the government's problem, or it's their fault, but it actually is just normal, part and parcel of that whole thing. So often what happens is that the central banks will tend to raise interest rates, which will then tend to curb inflation. That's their main go-to tool. So they'll up the interest rates to stop people from borrowing money, to cool things down a little bit. And we have that happening in quite a few different economies, not just the US, it's all over the world. So I'm just showing you this because that also means that we're starting to see what can happen is we see a stronger currency. So in the UK, if they start raising interest rates, we would expect generally that that the pound would start to get stronger. And the reason I wanted to show you this is I wanted you to see the difference between the euro dollar, which is broken through here. Parity is sitting at about here. So this is parity, which is $1 to €1, which is sitting about there. So we're below parity. And then if you go and have a look at the pound, you see the pound is slightly different. So here we've had all-time lows, all-time lows. There's no other history before this. We could see that also this has been a little bit, and it's not near parity at all. We could see that the pound could find a strong reaction here. So how do we know if this is a monthly chart? How do we know if the pound is going to find some strength here? How do we know that? Let's go through and have a look. So what are we looking for? We're looking for bullish signals on the indicators and bullish signals on price action. So go down to the weekly. We can see the levels that we need to be paying attention to. By the way, if you're looking for these, the tools I'm using, so we've got for trading, position size calculator is a great tool. And the one that is drawing my support resistance levels is known as fractal support resistance. So if you Google this, you will be able to find it. They are free tools that I use. So I use position size calculator for trading. So that's my trading tool. It's free. So here, for example, I can then say, okay, I'm going to go trade this. I can see what do my lines look like? Am I going long or short? And then I can see the different levels, and it will calculate. If I say, okay, that's my risk 1%, it'll do all that for me, just so in case you guys know that. Or I can go in at 0.5%, 0.5% risk, for example, and then see what that does for me. So these are very cool little tools that I can use. I've got a clock that I like to see the countdown. And if we have a look at this now, so if we just go and have a look here, if sterling is going to change trend, if it's going to end up rejecting that level and it's going to end up going higher, what I would expect to see, and you can see a bit here, is some bullish divergence. So we've got high lows, high highs. We don't have it here. So that doesn't mean anything. What that means is that if you don't see it on both, so I've got the MACD and RSI, if you don't see it on both, then it's nothing to be concerned about. So the reason I'm doing that is because I want to see, look, if where we are, is this a significant level? Is price getting ready to change trend? And if that is the case, then we would expect to see, if we go down to the daily, now, what do we see? Then I would expect to see some bullish divergence. So if the pound is going to end up bouncing off that level, rejecting that level, then I want to see some divergence. And what I can see is a bit of it coming in here. So we've got, you can see here that the lows are getting higher, a little bit more bullish. We've got a low here and a lower low, but we have higher lows on both indicators. So what does that mean? It means that now the market is slowing down. So the best way to use these tools is that to understand that the market has slowed down. The speed at which it moved from here to here, and the speed at which it's moving now is lower. Is the speed at which it moved here is slower than it moved here. So basically it's saying the market is slowing down, and therefore there's a possibility that the market is going to react. So what am I looking for here? I'm looking for a double bottom. Here's a bottom. Here's another potential double bottom. If we break above there, we get a double bottom. So we get a move down. We've got a double top here, don't worry about that, but we've got to move here. And then if we break above that, then we start to have, and that's on the daily, then we start to have movements to the upside. So how could that happen? Well, you can have a weaker dollar, you can have a strong dollar, but you can also have the pound can get stronger. So it isn't always about, this is the problem with using fundamental analysis on a currency pair, is because you're sitting there and you're like, well, you know, the pound is weak or the dollar's strong, but then you have to take two different economies into account. Okay, so this is the problem. So for the most part, I'm expecting this to climb to the upside at some point soon. We can see a bit of bullish divergence coming in here. We can see it on both sides as well. So what I'm looking for here is to see a very strong rejection and to see price start to head up here. Once it breaks above this level, then I'm looking for price to start to move to the upside. Okay, so let's go further down. Let's have a look at it on the 4 hour. Here you can see a big move up here. We had a big move up today. Overall, the trend is still strong. If the dollar is still, quite strong, we're going to see this continue to push down. But what I can tell you with absolute certainty is that the pound is starting to push back now. The pound is definitely starting to push back now, and from about this level. So I think this is going to be a major level. I think we could see the market push up. Really, where it changes the game is when it breaks above these highs. Okay, so for now, it's just ping-ponging up to these levels, but if it breaks above these highs, then it's definitely, then the game is changing. Okay, so let's quickly look at all the GBP pairs to see how they're doing. So if we go to the daily, what I'm looking for now is, you can see here, we've got a nice downtrend. We've got some definite bullish divergence, bullish engulfing candle, bullish divergence on both indicators. It's very reliable, by the way. If you're not sure which tools you can trust in trading, here are the things that you can trust the absolute most. One, SR levels. So support, resistance levels that you can see on the monthly or weekly, for example, or daily. You can trust those. That's the market goes to those levels. Two, lows and highs, right? So now you need lows, highs for a trend, okay, which basically means for the trend. Then you can start to add other things. Then you can start to add in moving averages, momentum indicators, which is what the MACD is. Ugh, terrible spelling. Which is MACD, RSI. You need two for double confirmation, or stochastics is fine. You've got CCI, and you have like Williams percent R. These are all well-known tools that you can use. Then you can add to that FIB levels and pivot levels. That's it. Like, there are other tools that you can use, but these are absolutely. So you start with SR levels. What is the trend? What is price action doing? Moving averages and everything after this, everything just basically adds clarity. Okay, but then it's just going to make it, it's going to try to help give you clarity. So here we can see there is a downtrend. Don't worry about why the euro is weakening, but also don't worry about why it's strengthening. That's the kind of stuff that will make you go crazy. We're going to do this for 10 more minutes and then I'm going to wrap up. But this is the stuff that'll make you go crazy. I've been doing this since 2009, so that's 13 odd years. And at the end of the day, it's easier to just go with what price is doing and wait for an explanation to come after the fact. I will. So there's a couple of people that are asking for a copy of the recording. Just so you know, and I apologize again, this is all on me, I own it, it's my fault, but this email address is always available to you. So if you want a copy of the recording, just email me and I'll send it to you. Okay, so Adam at Trade with Precision, and I can send a copy of the stuff through to you. I was actually hoping that you would get an email that says, here's a copy, here's a link to the recording, but I know that not everybody does manage to do that. So it's very important that we can see here in these cases, we can see both the MACD and the RSI are bullish, they are trending higher. And the shift in trend is when you go from, so there's your low highs, low lows, that's your downtrend, is when you start to produce high lows, high highs. And ideally you start to break that. So if you can do those, then you see a shift. So that's why once we break above here, and I think this is a bullish engulfing candle with bullish divergence, it's overextended to the downside. So let me explain my logic to you guys. This, the dollar is very overextended. We can see here it's overextended to the downside. If we go look at it from, you can see the weekly has managed to move down. We're at a major level historically. Look at it from a monthly perspective. We've just moved straight down. So there's been no retracements that we've had in a while. If we then go to the 4-hour or the daily, we can see we've got a bullish engulfing candle here. We've got bullish divergence on both indicators. So all of that implies, when you put all of that together, it implies that the market should do a move to the upside sometime soon. Okay, so I think with the bullish engulfing candle, we are seeing the earliest stages of a move to the upside here. The bullish engulfing candle at this point is, we always want price action to follow through and show us what we're expecting the indicators to do. So I'm expecting cable, which is GBP US dollar, to head a little bit higher. If we go look at Aussie dollar, you can see here the difference is we've also got bullish divergence, but we actually have a higher low. So we've got a lower low here, and this is very much similar to a inverted head and shoulders, something like that. So there we go, boom, 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 boom. And it appears there's our shoulder, then our head, then potentially our shoulder. That would see a move up to here. So we appear to, and remember as traders, guys, we're only worried about what am I looking for this week. I don't care what it's going to be doing in 6 months' time, because in 6 months' time, it'll be something else. So there's a question here that's come through. Is this software a C trader? No. So Evelina, just so that I can clarify, in the past, I used to use the C trader software. Most people who are attending these webinars are using MetaTrader, MT4 and MT5. So just as it happens, I'm using those, but if you go back, you'll see that we've also done them in the C-Trader software. Both are very good. There's no difference between them, really, in terms of that. You just decide which one you like the feel of, and you use that one. Okay. But this is MT4. If I go back to this, let's just see if that will give me this one. Let's just see if that does it. C-Trader. There you go. Okay, it's the same thing. So you can use either one. They are pretty much the same thing. And in fact, the funniest thing is when you get started in trading and you learn your first 1 or 2 or 3 platforms, you're just very nervous. But after you've kind of been doing it the same way I have, and I have probably used about 30 different platforms, after a while you realize they're all the same. Okay, so I appreciate that for you. If you're new, it's a different thing, but also don't stress about it too much. Okay, so we are using the NT4, NT5 platform. So that looks bullish. Let's look at Kiwi dollar. Okay, also potential high low. Look at the bullish divergence. When you see bullish divergence on both, that's not a fake thing. That's a very reliable indicator, guys. It's very reliable. You've got lower lows here, higher lows there, higher lows there. It's a very reliable indicator, but you don't just buy or sell. You don't just change direction. You need to see price action confirm that. Because what it tells you is it tells you that effectively price is overextended and it needs to change direction. So that's all we're really looking to do here. You can see here the MACD is trading fine, but actually on a daily perspective, it is looking to turn around. I would say with a bullish divergence, so some of you might be wondering, well, do I buy now? You can, but it is higher risk. There's no trend. Here was an uptrend and it broke below that. So if you have a downtrend and you break above that, then this part of the trend is done. If you have an uptrend and you break below that, then this part of the uptrend is done. So now you're waiting to see what the market is going to do next. And right now, we've broken below all these lows. So we don't have a clear direction. We don't know which way the market's going to go. So you can, but also you can wait until the market starts to produce high lows, high highs. And then you can become a buyer at these points here. So that's a question of patience as well. 5 more minutes, guys, 5 more minutes. Is there any currency pair in particular you want me to have a look at? But let's go through these. So let's look at Euro GBP on the daily. Not a clear direction, uptrending. Let's look at Euro Aussie, trending down, lower highs, lower lows at a major level. Euro Kiwi, trending down, looking nice and bearish. Euro Yen, no clear direction. Ping-ponging up here. Euro Swissy, nice and bearish. Look at that. I wanted you guys to see this. So when I was getting into trading, it was here somewhere. Here somewhere. And at that point, you're not going to believe this, but the yen pairs and the Swissy pairs were like, it was guaranteed money. It was guaranteed money. Like they were trending, they would just trend like this and you would just trade them. And they would just, it was this, when the setup came, you took it and it would just deliver. Okay, so, but you can see they got to a point where their currency was so strong, there was some pushback, so that was the intervention, there was a bit of intervention. We're starting to creep below this level now. So in principle, the idea here is, and nobody would have told you this, but I'm telling you that Euro Swissy, especially on the daily and for the timeframes, the general direction probably, until the SNB, the Swiss National Bank, intervenes, is to the downside. It's just going to keep going in that direction. So what we are looking for as traders is entries on pullbacks, always entries on pullbacks, on pullbacks, on pullbacks, and then looking to target 1 to 3. So if your stop loss is here, entry is there, 1 to 1, 2 to 1, 3 to 1. Okay, but it's very reliable. However, and this is a big brotherly advice kind of thing. Understand that the Swiss National Bank might intervene, which they've done in the past. If you go to the weekly, you can see they've done it here and here. And the Swiss National Bank decided to do stuff. So usually you want to pay attention to what the bank is doing. If they start talking about it, you want to be cautious. But for now, that is the direction. That it has always, this is the amazing thing, it has always, the entire history, going back to 93, 1990 here, the history of it has always been that the Swiss franc is slowly but steadily strengthening against every other currency pair. All right, so I've had a question here. Can somebody said to me, Adam, please can you have a look at the Mexican peso or real? I forget which one it is. Let's go through it and have a look at these ones here. So it's the dollar against the MXN, this one here. All right, let it just load up its data. Let's see what we got there. And Aussie Kiwi. Okay, so while that's doing its thing, let's go look at Aussie Kiwi. It's interesting because Euro GBP, so Euro GBP is a proximity thing geography-wise and is very much, in my mind, the same as Aussie Kiwi. Because obviously, Australia and New Zealand are very close to each other. There's a lot of proximity. So what is the current trend with Aussie Kiwi? It is to the upside, there's no doubt about it. It is coming into these major levels, so I would be very cautious in this area. More so at 1.1291. So it appears to me that it is generally working its way back up here. Once it gets up here, I would think that it is very reasonable that it is going to ping back from that. If you look here, nobody else knows this. This is my thing. But a range has a couple of core things. It always has a central axis around which price will swing. It then has an inner range, which looks like this, and it has an outer range, which is usually those ones there. So there's a central axis, an inner range, and an outer range. Right now, it's pushing its way up towards that. Basically, it looks as though it's continuing to the upside. You can see it's very messy here. But it is going to test that level, which is 1.1275. Call it that. So that is where it is going. Okay, and you wanted me to have a look at dollar Mexican. I thought it was peso, but they always do this thing. Okay, so here we go. What is its current direction? Nothing. So on the monthly, we have no clear direction. We have this. There's your highs, there's your lows. It's range bound. Okay, so when it's range bound, it means that for the most part, it is going to ping pong between these levels until it breaks out. It doesn't have to break out. It could, as bearish as it looks now, it could bounce from here and go back up. So that's the annoying thing about ranges. Until you get out of them, they are in place until you get out of those. But I would say it seems to me that it is looking as though it's going to start to, it looks more interested in the lower part of this. Okay, you look at it from a weekly perspective, ping pong in between. I think it's more likely to push down than go up at this time. There's your setup. Very choppy trading, guys. Don't feel bad if this is too choppy for you. But yeah, it looks as though it's going to head down from here. That to me. So the reason I get that idea is that if you look, you can see that for the most part, it's got a high up here, a high there, a high there, a high there, but it spends a lot of its time at the lows. Doesn't mean it won't ultimately couldn't go that way, but it is definitely spending a lot of its attention and its focus on the downside. Okay, so that is for everybody else. Let's have a look at some of these charts. So we went through the Euro pairs. They were looking generally quite weak. So we had Euro Aussie, Euro Kiwi, Euro Yen, Euro Swissy trending down. If you are interested, by the way, in daily things, so just so you know, so if you go through to YouTube and you look for me, Adam Harris, London City Trader or London Trader, you will see me here. This is me. So if you go through here, you get a weekly analysis every single week and some other videos. Anything you want. It's all the same stuff we're talking about tonight. It's all the same stuff with TWP. And if you want me, like Adam, please can you talk about trade management, or can you talk about risk management or trade psychology? Just message me and I will do a video on that. Okay, so these are your weekly analysis videos. They are there as well. And just so that you have that availability, okay, just so that you know that, because what you're trying to do now as well is build up your technical analysis skills. So we're quite bearish here, but look at what has changed. For example, bullish engulfing candle, definitely bullish trending upwards. So we've got both indicators are starting to trend higher. And so how will we know when the trend has changed? When we start to break above here. So we have to produce a high, low, high, high. That is a confirmation of a change in trend. And right now we have the earliest signs of it. So the reason we don't buy now is because the market could do this and then this. So it can still go lower before it turns around. It's when it starts to break above here that we have much more confidence. So I wanted you to know this as well, is that traders are all different. Some traders will get in here, but they will acknowledge that the risk is higher because the market hasn't turned yet. Some traders will wait until you break above here and they will get in here. Some traders will wait until you come back and you get a rejection candle here and you carry on. Some traders will wait until you break above that high. So I need you to understand that different traders, depending on their personal rules or their personal comfort zone, will get in at different times. But you also need to know that as you start to go up, you get more and more traders coming in. At the bottom right now, all I'm telling you is that we are seeing the earliest signs of a potential change in direction. Price action is becoming, I know the price action, it's if you want to know which book is very good for you, Steve Nissen is very good. Yeah, he's good. So you've got Steve Nissen. So you've got Steve Nissen. I'll wrap this up now. So that's Japanese. He was the guy who introduced everybody to Japanese candlesticks. So he's amazing. He came through in the 70s. Okay, and then you've got Al Brooks. So Al Brooks. He gets a lot of respect. He's pretty good, but I find him very dry. He's very dry. Like I want to kind of shoot myself going through it, but it's there. He's on YouTube. He's got some good stuff. The next best thing is it's a book called Naked Forex. It has a phenomenal, it's a good introduction for beginner traders and strategies and price action. So it's everything you need to do. Your ultimate goal as a trader is to get to a point where you don't need other stuff as well. So you just need support, resistance, and price action. So Naked Forex by Peter Williams something. What's it? This guy, Walter Peters. There we go. Walter Peters. Very, very good. And you might even find a freebie of that floating around somewhere if you're resourceful. So that one is great. And then those are the same, but you're going back to university for sort of 2-3 years. So ladies and gents, what are we seeing with some of these trends? Look, the main focus is I'm looking at weaker pound or stronger euro. I'm looking at those various things. Some of the yen crosses we spent a bit of time on. They are bullish, but please be aware of the resistance up ahead. So when we take trades, we are looking at what is the momentum right now, but where is there a potential problem up ahead? Okay, so you've got Aussie yen, nice and bullish, producing, if you look at it now, obviously it's got high lows, high highs, it's bullish. We know the yen pairs are bullish, so we look at pound yen. This one does not look that strong. So we look at CAD yen, very bullish. Swiss yen, mostly bullish. Okay, but it's struggling at these levels here. So yen pairs very nice and bullish. Some of the Aussie pairs as well. Let's have a look at these, for example. So Aussie dollar is not as weak as euro dollar. So if you compare the two charts, you can see euro dollar moving down, but you can see Aussie dollar producing equal lows or higher lows, and Kiwi as well. So they're very similar. So they're looking more bullish than bearish. Okay, so principally euro pairs are weak, pound pairs are weak, yen pairs are bullish to the upside, depending on which one you look at. And then you've got some of the Aussie and Kiwi pairs. So that's it's a good way to have a look at all of these. Just go through these here quickly. So I was going to say to you, I apologize again. That's on me. It's very rare. If you know me, I'm always on time. This is the first time in 7 years that I've missed the start of a webinar. I can't apologize enough. I'll let IC Markets know that. I would encourage you to attend these webinars every week. So the reason you want to attend these webinars is twofold. Improve your technical analysis skills. Learn to see the markets through somebody else's eyes. And 2, trade ideas. Which markets should you be looking at? What where should we be more cautious? Where should we kind of go all in? Okay, so and I was going to say, but if you have any questions with regards to your account, please get in touch with the lovely folks at IC Markets. They're always following me up after each webinar. How are we doing? How are the clients? Are they happy? So just so you know, they do want to obviously make sure that everybody's happy. So if you have any questions, please let that contact these guys, and they'll be more than happy to help you. If you have any questions with regards to technical analysis, you've got my personal email address. It's over here as well. You've got that. And if you want access to the recording, you can do that. So you've got, that is my email address. And if there's any questions regarding the platforms as well, YouTube is the most amazing source for skills development. Okay, YouTube is very much where you want to be. I think that's it. There we go. Those are the slides. I apologize for starting late and finishing late, but we're done. And I want to say thank you very much. Thank you for your kindness and patience, and I look forward to seeing you in future webinars. I'm going to end this one now, and I will see you in the next one. Thank you.